right, hey there, Sam with you here. It's, what are we, Thursday, February 15th. And today I'm going to try something a little different. This was an exchange of ideas over a chart that I had with a member this morning, and we were kind of going back and forth on this. So I thought it would be a good video analysis for the day, because there's some things to look at here that can be valuable, you know, as you're learning this material. And it's an example of showing you that, you know, I don't want anyone to get the misconception that this is easy, right? So just because we put an Elliott wave count on it, you know, there's some subjectivity to it, because often multiple counts will work. And, you know, it's a process of deductive reasoning and then probabilities, and ultimately then it becomes a matter of money management and risk control, because, you know, your first assumption should be, well, let's assume I'm wrong, and if I'm wrong, where am I wrong, and what amount of risk am I willing to take to bring my opinion and my analysis into the market. So with that said, this is EOS to Bitcoin. I've got a 3-hour chart up here, and this is on Binance. Now here, I've left the 3, 4, and 5 off to the side, because this is open to some interpretation. So the things that we can see clearly. So a lot of times what I'll do is kind of back into the trade. I'll sort of reverse engineer it, if you will, based on what I can see with clarity, what is not subjective. I can see clearly, based off of our hard low here, that the deepest retracement I get is right here. So if I just work off of the low, and it doesn't have to be right on it, but we can look here and say that looks very likely like I've got a 1, 2. You know, it would be very hard to count that any other way from an Elliott perspective, or even just from an Algo perspective. We get a swing, we get a retracement, we go just shy of the 618, up we go, and you'll see here, as I've shown you many times before, that the negative 100 is going to be very close to the 1618, which is our highest probability zone for a wave 3. So when you first look at that, so I'll show it to you just so you can see what I'm talking about. So if we work from this as our 1, and we use the alternate projection tool from the proposed 2, so here we get this little box here. All right, so we can see high probability zone here for a third. So you might come into that thinking, and I've got a larger degree here, but just to make the case, it would be very reasonable at that point. You know, if we're over here, this would be very reasonable to think 3 and down for the 4. So if you took that trade as the 4, well, you know, good for you, right? So what a run we have there. But if we continue with that as the 3, well, then that would imply that this is our 4, right? And if I go back, if I think back to previous times where we've analyzed this coin, that was a count that was hard to argue with. All right, 3, 4, yeah, now extension in the 5th. So it makes sense. So if that were to play that way, then the assumption is that we have a completed 5-wave structure, and then now into the correction we'd have an A, a B, and we're putting in a C. Right, so if we take this on the assumption that that this is a completed 5-wave structure, if we come up here and we look at this, and we go 3, 4, 5, A, B, C, well, the next thing we're looking for is the C wave down here. Now, there is nothing that invalidates that count. That is a count that absolutely can play out, and it may be the count. But the thing with Elliott wave in this approach is that often you'll find that there's an alternate count that you have to consider. And that's what we were doing this morning as I went back and forth with this member. We were trying to come up with alternates. And he had a good perspective on this, that we were trying to, you know, go back and forth, say, well, what else could it be? What else could it be? You know, and that's kind of what I like to do with members, because I want you to start thinking about alternates. If it's one thing, where are you wrong? If it's another thing, where are you right? So again, the idea here is that, you know, going into this, that's perfectly valid. We've got perfect subdivision into the 3. It goes right where you would expect the 3, but then we get that. So does that lock us into the idea that that's a 5 and that we've completed? Well, you know, again, as I will always suggest, you want to question it and say, could it be something else? What else could this be? So one thing that you might do, just as would be a place where I would go last, is say, well, let's look at the oscillators. Well, here's the big spike here. We know that from an Elliott perspective, that the third wave is going to be the strongest wave. That's the typical rule that we're looking for. So if you look at that and go, okay, well, wait a minute. Could this be a third up here? If I just look at the oscillators, well, that would tell me that that's a 3. Okay, so I can't discount this 5-wave structure. I've got to count that somewhere. So let's just take that off for a second. So what else could this be? Well, if that's a 3, then there's a reasonable chance that that's my 4. Well, wait a minute here. So this doesn't get as high. Well, what could that be? Well, we certainly could have a truncated 5th there. I mean, you can see that's within a, it's very, very close. So, damn near you could call it a double top, even though we go a little higher here. But this subdivides very nicely into a potential 5th. So then you start working backwards and you go, okay, well, can I get a count into that would make sense? Because I can't just discount this. There's a 5-wave structure here. I've got to count that somehow. So how would that work? If we're working from the 2 here, can I get this 3? Can I get the subdivision here that would work? Well, if I take this off of this low, well, then clearly this would have to be a 1. This would have to be our 2. Now, why does that have to be a 2? I'll take it up here. I'll show you this. We get a 3, 4. We get a 5. So we have a count there that works. So let me take that down to an hourly and show you this. So if we now dig into the subdivision here, well, this is the first thing that's a little problematic because it's somewhat unconventional. We see here we get this double bottom here, right? It's exact. So you've got to look at that and go, that this correction. So we get an ABC here, but then this move here is 5 waves. So this is a little tricky here. So most likely the way we could count this to get this count to play, and again, and when I say that, what I mean is not violate any Elliott wave rule set here. So we could have this as an ABC. So this certainly plays as potentially an A. Then we get an A, B, C into a B, and then we come down in 5 waves here into a C. So it's ugly. It's not your typical structure that you would see, but it plays. It plays as a, that you've got to dig into that subdivision. You can see the pivot here down to the pivot here. So we get a 3-wave into a B. So we get an expanded B wave, an expanded flat, right? So this is a perfect flat correction. 3 waves into the B. It goes just a tad beyond the A, not violating anything, but the tell here, the tell is the 5 waves down here. That implies that it's a C wave. So now if we look at that and go, okay, well wait a minute now. So could that play? If I've got this, so I look here and go 1, 2, this now is starting to make sense as a 3. So if I measure that and I look here and I go for my low here, well, if that's the 1, do I learn anything by going to this as my 2? Well, the 3 has to go at least 100% to qualify. We get there. It's not, it's not perfect, right? We're not, but look what does play perfectly. So here, again, kind of mixed messages here. If this is a 1, 2, the highest probability zone for the third is right up here at the 618, which is what catches this top. So, is this 1, 2, 3? So, you might have this. We do get subdivision here within this as the third. So now you got to look at that and go, well, wait a minute. Maybe I'm playing this 3. Right, so that's why I was moving this off. Let's move these off, and let's not make assumptions yet. So that certainly is a 1, 2. This is my highest probability zone for my third. Well, then, wait a minute. Maybe this is my 4th. Right, and then within this, if I open this up a little bit, we can get the subdivision here. We can see a 1, 2, 3, 4, 5 into my 3. Okay, well, if that's the case, then so we're trying to get a handle on where this could be going, because it's going to affect what we're projecting and what we're using for retracements. So already we've now relabeled this multiple times. So now I'm into 1, 2, 1, 2. Is that 3, 4, 5? Is this topping out right here? So here I'm 1, 2, 3, 4. So this would top out as a 3 here. You see that? So, and all I'm doing is I'm just using the alternate price projection tool to give me my high probability zones for that wave count. And then can I get the subdivision in there that would make sense? And I can see it. You can see it pretty clearly here. 1, 2, 3, 4, 5. Up I get. So that's perfect. So I had the 1618 here to top here is potentially a third, but it plays as a 1, 2 as well. And then I get it again. So looking at that now, so let's take that off and say, okay, well, would that make sense? Again, in the kind of in the reverse engineering context. Well, if this is my 2, I'm going to look for a relationship between the 3 and the 4. What do I get here? Right into the golden pocket. I mean, it just dabs a toe right on the other side of the 618, right into the golden zone. So couldn't be any more perfect. We don't overlap the 1 here. Because this is the pivot that we're playing as the 1. So we've got plenty of distance here. So I get a 1, 2, 3, 4, 5 to complete a 3. Now, I look here and I go, well, yeah, it comes up short, but can I get subdivision in that as well? Is it there? Can I find good 5-wave subdivision in that count there? Well, it sure looks like I can. So let me put this in another color. We got to change the degree, but this sure looks to me like I can get a 3, 4, 5 out of that. It's right up in here. Let me change that degree. So we'll go down to sub minuet. So I can get a 1, 2, 3. You know, let's measure it because this could play either way. This looks to me like we might play it this way. So let's measure it and see if that helps us within this count. So I can go from my length of my 1 to my 2. Okay, well here's my 1618 zone again. Looks like we've got, but here's the 2618. Do you see that? So that's an extreme for a 3. So it just because this is where they typically will top and retrace, 2618 certainly that's an extension for the third, and we literally get it to the tick. 3, 4, and we get a little diagonal into the 5th. So we get a little ending diagonal. Hard to argue with that, right? So so that's why you can't lock into these counts. You've got to work backwards through it because now this is affecting what we think is happening here. If that's the 3, then we're putting in the 4 here. Well, we got to go dig into that. So I think we've got a pretty clear count here. If I go, there is my 4, 3, 4, 1, 2, 3, 4, 5. Get a truncated 5th. Okay, so let's pull some of this off. Now we're just working back through it, just using the probabilities of where we're likely to find these pivots. And one thing we can say with certainty, the market is clearly trading technically. Now, we've got the fib pull here. We've got the algo pull for the length of the 2 right into the golden zone. Here's their target up here. So it's not unreasonable to put this up here as our 5th. We know algos are going to be pushing for that. Well, now the question becomes, well, how do we get a handle on where the 4 is? Well, we know a 4 is most typically, again, just playing probabilities, between the 38 and the 50. Now, at times, right, in a strong market, they'll be 23 to the 38, right? But we've already gone past the 38. So we don't need to throw the 23 on here yet. So you can see I don't have it on. I will usually start with that, just so you know that. I will start with that on there. I'll keep the 23. If we get through it, then there's no reason. Now it's just another line cluttering up the chart. So now I'm in the hot box here. I'm in my high probability zone for my 4th. Now, where are we going now? Well, we got to do the same thing on the way down. If this is a 3 and I'm looking for my 4th, I know the zone that I want to find it in. Can I use any Elliott wave or algo pulls here to give me a sense of where I'm likely to look for that bottom? So doing the exact same thing. I'm just going to go to my fib tool. Now I'm going to work from the absolute high here. I'm going to go to my swing low. So it looks to me like I can play this as a 5-wave A wave. Here's a B. Now here's where a little Elliott wave helps. We know a B wave, can, just like the second wave, can be anywhere between the 50 and the 786. That's the probability zone. Yes, they can go higher than that, as we saw here. Right? A B can go beyond the pivot can go beyond the last pivot swing. So yes, they can go higher, but this is the probability zone where you're looking for that B. And it actually looks to me like we get a truncated ABC in here. A, B, C into the B. So if I was counting it, I would start with this. Until proven otherwise, I'd have A, B. Well, now is that C here? Well, look where the algo target is. Right? So they get it. It's to the tick. Right? So it goes a tick through it. couple of ticks through it. So I've got an ABC. Well, what happens next? I get a 3 wave, not a 5 wave. So do I need to rethink that? Could this now be the B here, and I've got a 1, 2, 3, 4 looking for the 5. Let's open that up and see if that works. Right? Again, it's this process of kind of reverse engineering it, because what we're trying to identify is the high probability zone for the next place to get long, because we're now under the assumption that we're in a 4 and we want to play for that 5. Here's our target. Well, here's the first algo target. They hit it. They got it. Reaction. But the reaction is not impulsive. It's a 3-wave structure, implying it's corrective. So we're going to pull down to the low here, and I'm going to pull from the last pivot swing of my B high. Well, here's the 50 reaction. They test it again. We don't look at the Vegas wave right there offering that resistance. So this now starts to play as an A, B, C. So maybe I have this. I got to open this up even further so you can see it. So this potentially plays here. We get a 1, deep 2, down for the 3, 4, looking for that 5. Let me change that color so you can see it a little better. Okay, so potentially now, this is starting to line up rather nicely. So now I might look at that and say, okay, from the 2 to my 3 low, right? If we're making the assumption that this is the 3 and the C might be over here. Right now, again, this is the process of just adapting to what the market is giving you as it moves. We can't get, because this could have been, as I just showed you, this could have been ABC and this could have been 1, 2. We don't get it. It rolls over again. So if you took this trade here on the assumption that you had a 1, 2 and you were looking for the big 3, well, if you took, you made a little money there if you took it, but if you just moved your stop up or, just reduced the risk, either you got stopped out at break even or you took a small loser. I mean, if you entered here, likely you just got stopped out here if you didn't touch it. On the assumption, because you're looking for that 1, 2, 3. And this was a very valid trade to go 1, 2, looking for the 3, then the 4. We don't get it. That's what you could have easily been looking for that and drawn that as your roadmap. A, B, C, down we go. We hit the algo target. Remember, we hit the algo target almost to the tick. 1, 2, doesn't happen. Right? Get used to it. Right? So the market's not ready for that yet. So we've got more selling pressure to come. So we get a 3 wave. It fails. It falls over. So if nothing else, when this fails here and starts to fall over, that's when you want to tighten your stop up. If you're here and you don't get that 5-wave subdivision, at the very least, move it to break even. Why take the risk? You didn't get the impulsive wave you were looking for. And as that starts to fail, then you tighten up the stop. Just good money management. All right, well, if I've got a 1, 2, 3, 4, well, now here I get front run on the 618. Now here's my algo target down here. Well, this is getting kind of interesting. Look what I get down here. Well, now I've got potentially a nice fat hot box down here that plays into all of this. So I've got algo swings and an algo target. I've got an Elliott wave count, and I've got a larger degree count, both an Elliott wave count as well as just a swing low to swing high, if I get that right on there. Here's my 50. I mean, does that make sense? Right? So now we're trying to get, do we have a 5-wave here? Well, we've just taken out that low. Double bottom. Again, this kind of looks like, let's open that up a little bit. Again, so where's the trade? Where's the trade? Well, you could, I'd be waiting for this. Again, why force it? If it takes off, right? So this is the thing I always try and teach you. If it takes off, don't let the FOMO get you. Oh, God, I'm missing the move. It's just more information, because our target is way the hell up there. If you miss it, so if it bottoms here for whatever reason, and we start to take off, okay, all you got was more information. It's the next retracement you wait for. Now you've got a pivot that you can work from as potentially a low. But this looks to me like higher probability we're heading down here. Same thing. If you don't want to try and buy the sell-off, well, you wait for the reaction. Do we get the kind of reaction we would expect if this is a 5th wave, a C wave, and a 4-wave a confluence zone in conjunction with an algo target? Are we going to get the reaction we'd expect? I mean, here was the last algo target. We got a reaction, but we don't get impulsive. We roll over again. All right, not the end of the world. More information. So the correction's not done yet. So what? So can I do it again? So can I look here? So okay, from my swing, come here, from my swing high to my swing low, what do I get? Well, here I'm back in the sell zone. Do you see that? So it's implying, right? So here's the next target. Well, now I got to look at that and go, well, wait a minute. That's sitting, maybe a double bottom here. Again, if it stops here, right, and it starts to run, we get the reaction off of the smaller degree algo target because there's algos hitting all of these swings. If we get the reaction there, right, and you were waiting to get long down here because you love this the fatter target down here. Well, again, you don't panic. You just go, okay, well, I got a pivot now I can work with. So you wait for the next retracement. Where's your stop? Because you're looking for the 50. Because if that's a pivot low, if that's our 4 low, if this ends up being it here, well, we're looking for a 5-wave structure to imply that the trend is back on. We got to get a 5, not a 3 like we got here. If we get a 5, then we wait for the 2. Where's the stop? Below the pivot, because then you're wrong. Then it's not done yet. It's this process of deductive reasoning. What are we, if this is correct, what are we anticipating to happen? And do we get confirmation of that based on the way the market responds to these technical pivots? That's all we get. That's all you can do. There's no absolute correct answer. You don't get that. The market doesn't give you that. You get opportunity zones where this thing could happen. You might anticipate, well, if that's going to play that way, I can anticipate from here that I'm going to get a 5-wave. It could be a diagonal, but I'm looking for a 5-wave structure. If I get that, that confirms the probability of this being the low. Now I can wait for the retracement. So now I've got a double confirmation. Do you see what's happening there? If we do, and again, I'm hypothetical here, but if we pivot here, then this sets up as potentially the 4th of the larger degree. If I get a 5-wave structure from this, this is adding another confirmation to that pivot. Adding to the probability that what I'm trading here is a 2. And I'm looking to get into the 3rd of the 5th. So if I take this all the way back out, all right, and we get a sense of where we could be going. Do you see what I'm doing? See, when you put it in perspective, then it doesn't look like, if you get zoomed in, you're down on a 15-minute, you lose perspective. I always want to encourage you to pull back out and go, wait a minute, where are we in the larger degree? What could be happening here? This could be the 4. Right? There was a long time where this looked like we had a 5-wave that was completed. And it was only through going back and forth with a member today that we started to look at this and say, this very well, based on the measuring that we did, and we went back and forth on this, based on that measuring, we could just be lining up here as the 4. Here's our target for the 5th. That's the algo target. Right? So you see how we have algorithms across all different swing ranges and time zones that are at play in here. So so right now, what's the one we're trying to get behind? So we're trying to use the Elliott wave to give us an entry here of the largest degree. So I get a little hot box here. So I alarm it. So I want to know if we're going to break this algo target here from this last little swing. I want to know, because then the probability increases that we're going to this one. Do you see the green one here? But all of it is playing off of the larger swing here and this one, which gives us this target up here. Right, which is unmet. We're just correcting it. We're correcting that whole structure. Algo targets all along the way. Can we combine the Elliott wave with what we know about how the algos work to tuck in behind them and try and ride behind there? Because I always think of it as like you're skiing in their wake. You just want to get behind them, or if you like, you're trying to draft behind them. Right? Maybe you want to think of it that way. I always think of it as, they're the big muscle. I just want to get in behind them. And I want to use the Elliott wave to try and ride within these little swings within it to try and look for, can I catch a 3rd here? Now, it's not likely to do this. We're not likely to go straight up here. There's going to be little corrections along the way. I want to get those. I want to get the first swing and the 3rd, bank a little profit. Maybe I leave half the position, and then I'm looking for a reload here to catch the 4-5. So I see because if I'm right, I have an unfair advantage. I have the roadmap ahead of time. Right? Now, most of the time, you're going to be wrong. So get used to that. That's why the question has to be, where am I wrong? Where does this whole thing break down? And if so, where, how much risk can I afford to take here? Am I willing to take? Right? We all know EOS is a strong project. We want to be long there, but right now trend's going down. So the question is, where can I dip in here and get positioned for the potential? Because that's all this is potential. Where can I get in here in a low risk way to be positioned to be there for that ride if it happens? And we don't know that it is. I mean, wave counts fail all the time. You can't, just because you've identified this, you can't take the position that, well, I know exactly what's going to happen, because you don't. I don't, you don't, nobody does. But the potential is there. And that's all we're trying to do, is get positioned, because it could happen. And if it does, then we know where the probability zones are for these swings, that where they're likely to occur. And just as we would analyze it the same way we did over here. Do I get 5 waves? Do I get a 3-wave correction? What are the algos doing? What are the swings they're working with? Can I find them? That's trading right there. All right, guys, that's a good one. All right, I'll stop it there. I went long on that one. Back with another one in a bit.